All right, what's up, Tycoon? Super excited for today's video. We are looking at Amazon after the stock split, and we're going to break it down whether you should buy into Amazon if you're looking for possibly some short-term opportunities, and then we'll also go over, for long-term opportunities if you're a long-term investor, some price levels where you can wait for the price to come back down, as we are in a bear market officially in the S&P 500. So there's no signs of a clear reversal anytime soon, but there are some, possible swing trade opportunities here. Okay. The first thing we're going to look at, all right, is going to be this channel right here. All right. So we're looking at this resistance line up here and this support line right here. All right. This is going to be our main action and where we're going to be seeing most of the price action, I think. And, where we're starting to see a little bit of a pattern. Okay. The first thing I want to point out on the chart is that we have some very nice bullish divergence. Okay, now it's not a very strong bullish divergence. It's what you'll call maybe a little bit of a weaker or a slight bullish divergence, but it's when the stock price is actually making consistent lows. So we have here a triple bottom. Okay, we have a 1, 2, 3 bottoms right there on the chart for Amazon. But if you notice on our RSI, we created higher highs. Okay, so we made a consistent lows here. Okay, and we created higher lows on our RSI. That's a form of bullish divergence. And if you're in the Options Trading Tycoons Discord, I posted this a couple days ago, and I said look for a bullish pop, on Amazon because we do have this bullish divergence forming. All right, and we did get a nice pop off of that. So I would look for this trend line to be a key support level on our RSI as we continue heading upwards. If we do pull back, most likely for us to continue this uptrend, right? That we just started. It's not a very big uptrend, but we were up about 2.5% on the day. For us to continue that, I would look for a bounce off of this trend line. And if we break this trend line really hard and start falling lower, most likely we're going to break this major support level here right around 102 on Amazon. Okay. Now, again, as I said, we saw a triple bottom here. Here we had a nice double top. Okay, so these are areas where using some technical analysis can come into the market. All right, and you can look at these opportunities and say, okay, well, clearly, we're trading in this channel here. Now we have a double top. Maybe possibly enter a short position and ride it back down to support. Well, now that we've come back to the support again, it's a triple bottom. We've traded on this right here, right around this 102 level, 1, 2, 3, 4, 5, 6, 7, 8 trading days. Okay, so as I said, a lot of buyers in right around that $100 price target on Amazon. Our current lows are going to be 101.26. We wicked down, found some support there. Again, we're bouncing. Now, you may be wondering what these boxes here, these are gaps, okay? And these tend to fill about 90 to 95% of the time historically in the stock market. It's just a question of when, right? Certain market conditions have to be met. And, you have to take in how relative the gap is, according to the current chart data, right? So we have a very big gap up here from 140 to about 130 on the stock price. That's a very nice opportunity if we fill that in the short-term future. All right, if we look on shares, that's a nice 30% return roughly if we fill the top of this gap. But as I said, you have to ask yourself certain questions. Well, the first question is when do gaps up fill? Gaps up tend to fill in a bull market cycle. As I said before, the S&P 500 is in official bear market territory. So, I'm not planning on any of these gaps filling immediately in the short term, but that can happen. So I do like to chart them up. All right. We have a much smaller gap up on the chart right here from about 114 up to about 116. And we've already filled this gap up here from 108 down to 106. Okay. And we'll zoom in a little bit more on the price action just so you guys can see a little bit better. All right. And, here we have the 10th. We gap down on the 11th. All right. And 2 days later, where do we come up when we rally? We rally really hard. We fill the gap and then we drop right back down. Okay. So it's not a coincidence that that happens. These prices need to be filled on the chart, and eventually they will come back and fill. So we're starting to see signs, that we could be heading back up towards this gap as we've already filled this one. So we can take this off of our chart now. All right. and we can look to see, are we going to, rally higher and start to create higher highs? Okay, because for right now we're making lower highs. Okay, we have a lower high here, here's our high, lower high, and then we have highs up there, and we're just going lower. All right, so we're going to need to see buyers continue the buying action. Okay, we're going to need to see demand continue in the market, and potentially we'll be looking to see if we're going to get some nice patterns. Okay, because look here, we had a nice W pattern. Okay, boom, boom, boom. All right, so here's our double bottom, we ride it up here, and now we have a double top. Okay, enter a short position, we ride that down, now we're looking at a triple bottom. Okay, and this is what everyone else is seeing too. That's why we're seeing so much buyers, and why it's really hard for it to break this 102 level, right? It's because we're seeing the triple bottom. We know that since the split, a lot of people really want to go ahead and get Amazon like around 100, just because even numbers are easy, and that's what people tend to gravitate towards too naturally, right? So we're going to look to see, can we fill this gap up here and continue that uptrend and ride our momentum back up to the top of our channel? And will we continue to just trade sideways a little bit, something kind of like this, or just keep going up and down in this channel eventually until we get a breakout either to the upside? All right, and if we break out to the upside again, we have this nice juicy gap up here calling our name. And if we break down below, then I'm going to show you guys some of the major support and resistance levels. All right, we're going to go over here to this drawing I've got right over here. All right, and these are the major levels I'm going to be looking at. All right, we're going to go into our weekly chart right now, and we are going to go to our studies, and we're going to go ahead and turn the volume profile on. And what this is going to do is this is going to show you volume by price versus volume by time. Okay, because normally when people look at volume and mention volume, they are speaking on volume by time, right? But again, we're going to look at the volume by price, and we're going to get a nice little look at that right now. Okay, so we're going to be looking at these bars here to the left. The higher they are, the more to the right, the higher the volume by price. Okay, so what we're going to do is zoom in a little bit. All right, and now we're going to be looking, what is our major, where's the most volume by price? Okay, because these are going to be major walls for us for either resistance or support, right? So if we look here, we can see above, this is going to be our major resistance area right here, this little bubble right here. All right, so it's going to be right in between about 123, let's just call it 125 down to about 112. Okay, so from 112 to 125, there's a lot more buyers and sellers in the market. There's a lot more volume here at these levels than there is above, right? If you notice, we go above there, the volume goes off very, very sharply, and you kind of see that's why we fell so dramatically through these prices. Okay, if we look here, low volume, we see the volume high, and then the volume just goes lower and lower and lower. And if you look, okay, from this level right here, from this price, it just quickly fell. Okay, it didn't take or waste any time falling. We went, how much of a drop was this? It's a big drop. Okay, we went from 160, okay, all the way down to 100 very, very, very fast. Okay, and the reason being for that is, again, there was no volume. There's a volume gap right there. All right, so looking at the data, we can see that if we do make it back up to these levels, we know that there is a lot of volume in these areas, and we have to ask ourselves, what is that volume going to be? Right, is it going to be a bunch of buyers stepping into the market and pushing the price higher? Because if we do, we're most likely going to blow past these levels, because we know that there's not much volume in those areas, not much activity, and the activity happens when we get pushed up further to about 135. So that's our major resistance levels. Okay, is going to be right around 112 up to 125. All right, and then our major support levels, looking at our volume chart here, is going to be here. All right, in between 96. Okay, down to about 85. All right, so 96 to 85 is where you can look to start accumulating your next or dollar cost averaging, right? It's not financial advice, okay, but that's if you're looking to dollar cost average and you want to get in below 100, you can wait and see, are we going to find some support here at 96? and our buyers going to start stepping in the market because we know that there's a ton of volume at these levels? Or, are we going to drop lower and possibly head down to about 85, 86, and see, is that where buyers are going to step in? All right. So that's enough of the volume profile. We'll go ahead and take that off real quick, and go back to the regular chart. And we're going to zoom into the daily chart now and look at some Fibonacci levels. And we're going to see why these are also some major support and resistance levels that we need to pay attention to. All right. So the way we're using the fibs is we're charting our swing low up to our swing high. And our blue line is going to be our breakout level, and then the green line are going to be bullish, or I'm sorry, bearish price targets. Okay, areas where we're looking for the price action to fall to. All right. And if we have another bearish breakout, okay, and we break below this 102, 101 support level, okay, that has the fibs have us going down to $84. All right. Now, remember what I said about the volume profile too. Okay. That also lines up with the volume profile. We know that this was our high area, our next high area of volume. So, if we break through this level, all right, we could see some sellers step into the market. All right. Some selling volume push down to 85. And then we see buyers and sellers battling in between, that 84 to 96 level that I mentioned earlier. Okay. So that's what I expect to happen if we do break below 102 and 101, essentially breaking 100 on Amazon. The next area we're going to head down to is going to be $84 if we continue in a downward trend. All right, we do have a very nice support level below there at 81.37. All right, and this is from the past. If we go back to our weekly chart, okay, and we get my pretty face out the way, we can see here. All right, we have a low here of 81.3. That's where we got this low. And this is from a few years ago, I think like 2019, maybe 2020. All right, and then we have another low. If we go back, let's just pull this back 10 years. All right, and this is our next low that I'm going to be looking at is the 46.59 level. Okay, so right around $45, $46. If we start breaking that $80 level that we were just going over, okay, here at 84, again, we have these previous lows of 81.37 as a nice support level as well for us to bounce at. And if we break those, we have, again, a previous low of 65.32, and we have $61 as the target on the Fibonacci's. And below there is going to be $50 and 46.59. All right, so these are all of essentially the main areas that I'm looking at for Amazon for adding share positions. Okay, so if we break 100 and I'm looking to make some long-term investments in Amazon, right? Again, not financial advice, but you could come in here and you can start to accumulate between 84 and 81, right? And if we break these levels, what you can do is either have a stop loss below. Right. So let's say you buy in at 84, your stop loss would be below 81.37. If we break below 81.37, there's a potential we could head down to 65 and then 61. So, if you don't want to have that risk in the game, all right, you can just wait for it. You can have your stop loss here, wait for it to come down here and buy back in, repeat that process using a stop loss. Or if you're just looking to accumulate as many shares as you can at certain prices, these are the prices that I'm personally going to be going shopping at myself. 85 to 81, 65 to 61, and 50 to 46. All right. If we break below those levels, then we'll have to find new price targets that we feel comfortable investing in for the future. All right. But for now, those are my major long-term price targets where I'm looking to be buying in at, for some long-term share positions. Otherwise, things do look good. Okay, let's go ahead and pull up the triple bottom again and zoom into our daily chart. And, we do have some nice signs that we could be continuing or starting a very nice little uptrend here. Okay. We have this nice channel that we're trading in. We have a nice triple bottom bounce. We have bullish divergence on the RSI. And, once we see the RSI get above 50, okay, we're going to be seeing some decent strength in the price act and in the strength of the stock. Okay, and that may be what pushes us up to the top here. Okay, and if we break our channel, break out of our channel here, again, we have that very nice gap above calling our name. All right, so thank you guys for watching. Appreciate it if you made it this far in the video. If you leave a comment, okay? Let me know what you liked about the video, what you didn't. Don't forget to like and subscribe, and let me know what stock you want to see in my next video.